What if Japan starts selling US Treasuries? Remember, Japan is the biggest holder of US government debt with over $1 trillion. And for years, that has actually helped keep US interest rates low and help support our huge government spending. But now, some Japanese institutions have already started pulling back from foreign bonds, which includes buying US Treasuries. As Japanese interest rates go up and the yen starts to get stronger, it gets more expensive to borrow. So instead of borrowing money, that money is just going to stay at home. And if that trend continues, the US could actually lose one of its biggest lenders. And that would mean huge borrowing costs here in the US for consumers, and more pressure on the Fed, and even more volatility in the bond market. And you could start to see a world where interest rates in the US actually go up, not because of inflation, but because creditors just don't show up to the auction. Even the Japanese finance minister said recently their US Treasury holdings could be used as leverage in trade talks. Now, he then later was like, just kidding. But it shows you that it's actually a real possibility. For now, the Bank of Japan is under a lot of pressure. They have over 1.3 quadrillion yen, or 260% of GDP. That means even a small increase in interest rates could have a huge consequence. If Japan's interest rate goes up by 1%, for example, that alone would add about 13 trillion yen, or $85 billion in yearly interest payments. That's more than what Japan spends on its entire defense budget for the entire year. So besides selling US Treasuries then, Japan has two options, and none of them are good. Option number one, raise interest rates to fight inflation and protect their currency. But that risks blowing up the government's budget. It's like having a giant mortgage at a super low interest rate, and if that rate jumps even just a little, the monthly payment goes up and you just can't afford to pay it anymore. Or option two, keep interest rates low so the government can keep borrowing, but that lets the value of the yen fall, and when the yen gets weaker, the cost of importing stuff gets a lot more expensive. So it's like having a low interest rate on your credit card, but every time you go shopping, everything costs more than it did last week, and the cost of living goes way up. So remember, the Bank of Japan already owns over 50% of the entire bond market, and they've been printing money for years.